Coming up on Market to Market, dozens of farm groups offer support to the White House on trade. The administration's top trade envoy makes the rounds on Capitol Hill. The snow may be gone, but the troubles remain for the North Dakota corn crop.
As far as spring wheat is concerned,
And market analysis with Ted Seifried next.
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Sukkot Manufacturing Company, providing equipment and buildings to store and condition grain to help farmers adjust to market swings. We build drying, moving, and storage equipment designed to preserve the quality of their crops. Sukkot Manufacturing, store now, profit later.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.
Hello, I'm Paul Yeager. We are producing this week's program from remote locations out of an abundance of caution as the COVID pandemic plays out across the world. The impact of the coronavirus is being felt in many ways. Americans emerged from their homes in May with their wallets, and the economy reflected it. Retail sales jumped 17.7% last month as consumers increased online purchases and, when in the physical store, took home building materials and groceries. However, Fed Chair Jerome Powell said that there was significant uncertainty about an economic recovery during testimony to Capitol Hill. He also called the pandemic a real inequality increaser. The White House is looking at a $1 trillion spending spree to rev up the economy. And some of the boost could come in the form of global trade. But as Peter Tubbs reports, that path may not be easy.
Agriculture remains a key sticking point among stalled U.S., EU, UK trade negotiations. This week, U.S. officials downplayed the prospect of a transatlantic agreement by the end of the calendar year and accused Brussels of thinly veiled protectionism by safeguarding European markets under food safety concerns. U.S. duties on European wine are projected to remain in place, and the president could slap additional tariffs on the EU if member nations adopt a French digital services tax on American e-commerce companies. Last year, Trump threatened to bring 100% duties against $2.4 billion worth of agricultural products and cosmetics from France. While multilateral negotiations to set international tax standards have faltered, the U.S. is more optimistic a deal with the United Kingdom can be reached, though the timing is precarious, and depends largely on Britain's challenging future trade agreements with the European Union.
My honest feeling is that we are not going to have a deal with the British government simply because there is no political will on the side of the British government to have a deal, and that precludes a very close relationship with the European Union, especially in terms of trade.
Nearly 200 U.S. farm and food advocacy groups reiterated that China, America's third-largest trading partner behind Canada and Mexico, must meet Phase 1 trade deal obligations, which include unprecedented orders of American agricultural goods, some $200 billion over 2 years. U.S. officials expressed their confidence the Middle Kingdom was on track to fulfill the agreement, even as 2020 domestic net farm income is projected to decline $11 billion below 2019 numbers. In a letter to the president this week, the coalition, representing every sector of the food chain and rural economies, praised the chief executive's efforts thus far and called on him to ensure continued implementation of the agreement. From Market to Market, I'm Peter Tubbs.
The Trump administration has made China a target of tariffs, with retaliation coming at the expense of the American farmer and their products. Some $360 billion worth of imports from China remain under tariffs, and more could be coming as the administration looks to push U.S. companies to pick up some of the work done offshore. The White House's top trade envoy was summoned by Capitol Hill for his annual checkup in both chambers. Peter Tubbs has the story.
China dominated discussion about U.S. trade policy at the House Ways and Means Committee Wednesday. Ambassador Robert Lighthizer, chief negotiator on the Phase 1 agreement with China, believes the economic giant will meet its commitments on purchasing American agricultural products.
We expect them and they expect to make their commitments in this calendar year, even though the agreement technically didn't start until February 14th and the exclusions really started at the beginning of March. If you look at the commitments generally, there's a bit of a backloading if you look at ag sales, and the bit of the backloading is that soybeans tend to be sold at the end of the year. They're buying a lot of soybeans now, but big numbers at the end of the year. If you look at 2017, which is the year we compare it to, there was $10 billion of selling at the end of the year. So our objective is to get as much of all the other commodities as possible and realize at the end of the year there'll be a lot of soybean sales.
The United States exported over $24.3 billion worth of agricultural products to China in 2017. The export value dropped to $21.6 billion in 2019. The ambassador acknowledged that the relationship with China is challenging to maintain.
My position has been that this is a very complicated relationship. It's gotten more complicated because of actions that they have taken recently. It has security implications and cyber implications. It has business implications. It has human rights implications. And I view my space, my lane, as being the trade lane. A number of American jobs depend on fair trade around the world, and fair trade with China is, of course, part of that.
The tariff war between the two nations has been expensive in both the loss of exports headed west and the tariffs paid in goods coming east. The ambassador defended the use of tariffs to discourage bad behavior.
But on this general issue of equating tariffs with pain, I don't quite get that. I think tariffs are a tool. They should be used to create jobs in America when they can be used to create jobs in America. America's had a lot of prosperity using tariffs. People who criticize tariffs, I like to say every now and then, well, then what would you do? And so far I haven't had any response other than, well, in the face of Chinese cheating, we would talk to China. And I would suggest that over the last 2 decades, people have talked to China a lot, and the situation got worse and worse and worse and worse and worse.
The start of the USMCA agreement and its implications for agriculture were also discussed, specifically the ending of controversial classification of Canadian dairy products.
Canada has a few months to get rid of the Class 6 and Class 7 programs, which have been so harmful to us. We'll be looking very closely to see whether they're going to shade and not have American farmers get the full benefit of what they negotiated.
The USMCA takes effect on July 1st. From Market to Market, I'm Peter Tubbs.
A mostly wet pattern since 2018 has set up much of the grain belt for recharged subsoils heading into the current crop year. As the moisture has arrived in various forms, it has plagued some producers. The 2020 corn crop is in the ground across the United States, with 95% of it emerged, according to USDA. But the warmer and drier weather reduced the crop's good to excellent rating by 4 points this week. The soybean crop is 93% planted, 81% emerged, and 72% either good to excellent, the same as last week for conditions. However, drier situations are beginning to develop, according to the University of Nebraska's Drought Monitor. The biggest change came in Indiana and Iowa. Other locations in Minnesota, Kansas, and points west maintain some of their drought status. As of mid-May, more than 80% of the projected 3.2 million acres pegged for North Dakota by USDA were still unplanted. If realized, The Peace Garden state would have the 11th largest total number of corn acres in the U.S. Some fields in North Dakota are in need of rain, which is a challenging statement given the last 18 months.
In 25 years of farming, this is the second time in my career I've combined corn in May and June before.
Farmers in North Dakota have been battling Mother Nature for years. The seemingly never-ending cycle of rain, snow, and more rain has plagued producers since 2018.
Quite a few counties in the eastern part of the state had a major snowstorm. We're talking 10 to 24 inches of snow. And that snow really set the soybean harvest back and corn harvest back, and it really created wet field conditions. And since October of 18, it's been a cycle for a lot of counties in the state of just wet field conditions, very difficult trying to get crop planted, crop harvested. So it's been a struggle for a lot of producers.
An ideal growing season for Melvin is planting the crop in late April with harvest in October. The spring harvest did lead to a reduced yield for Melvin. The crop did make up for that loss with lower moisture content and fewer discounts by the buyer. The altered spring schedule has forced the family to make changes on the fly.
The thing for this year is the ground really wasn't fit to plant. So we put a priority on harvesting corn on those days. Once we could get some ground dry enough and not mud the corn in, we tried to plant corn. And so it's just a balancing act of going back and forth and knowing that our motto this spring was if the plan wasn't changing, the plan wasn't working. Because you maybe geared up to plant one day, but you switch gears, you're going to be combining because the ground wasn't ready. And it's all what Mother Nature allowed us to do this spring. We're at her complete mercy.
Next, the market-to-market report.
The weather kept itself in the headlines as hot and dry conditions worked over much of the grain belt. For the week, July wheat lost another 19 cents, while the nearby corn contract improved 3 cents. China kept buying new crop U.S. soybeans to offer support for the soy complex. The July soybean contract increased 6 cents, and soybean meal fell $1.90 per ton on the July contract. July cotton gained $1.79 per hundredweight. In the dairy parlor, June Class 3 milk futures improved 50 cents. A mixed week in the livestock sector. August cattle dropped a dime. August feeders gained $1.43, and the July lean hog contract fell $3.25. In the currency markets, the U.S. dollar index added 49 ticks. July crude improved $3.16 per barrel. COMEX gold increased $14.40 per ounce, and the Goldman Sachs commodity index shed almost 15 points to finish at 330.45. Joining us now to offer his insight on these and other trends is regular market analyst Ted Seifried. Hello, Ted.
Hi, Paul. Thanks for having me.
You know, this is just some weird times. We've talked to you a lot I've looked at all sorts of crazy things, and glad to have you here. We have to have something positive to talk about, but I don't have many commodities right now that we can do that. Let's start with wheat. That's not positive. That continues to face harvest pressure, continues to face a stronger dollar, up 40 ticks this week. What else is playing in that market?
Yeah, well, okay. So harvest pressure, I think, is the key that we have here for wheat. And, you know, when we look at Monday afternoon crop progress report, I think we'll be close to that 40% number. Once we get to 40 to 60%, that's when that starts to subside a little bit. So hopefully wheat is maybe close to probing for a bottom here. Now, we did have a nice bounce off the lows on Friday, but that was more, we had gotten very oversold after 4 days of being down really rather hard. That was more technical in nature. I don't think that was necessarily the end of it, but we could maybe start to transition into some sideways basing trade. I don't really see any reason for wheat to go sharply higher. Now, I would say, though, if corn could start to move higher, possibly following soybeans, that might benefit wheat. But, you know, for the moment, wheat harvest pressure, like you said, slightly higher dollar. In the long run, I still think the dollar will continue to come down. So next week, that might have a little bit of a different influence on the wheat. But we got to get past this harvest pressure first before we can start to get excited about saying, hey, maybe we have a near-term low in here for the wheat.
So you're not ready to make any type of sale right now. You're not selling off the combine if you're in Oklahoma or Kansas right now.
I mean, there's a lot of people that are having to do that, and that's what's kind of causing a lot of this pressure. But no, I'm not encouraging that. Hopefully we have hedged some wheat a little while ago at some higher prices. If you haven't done that, I think you do wait if you can, but not all of us can. So that's where the hedge pressure, selling pressure is coming from. But yes, this is not where I'd be itching to make some sales.
Okay.
No.
All right, on corn, that's a little bit of weather issue there. We have the shorts all on one end of the boat. What's going to get them to go to the other side?
I don't know if they go to the other side. You look at the balance sheet for corn. You look at the new crop balance sheet for corn, sitting at, some of us are going to argue a 3.6 billion bushel carryover, but 3.3 to 3.6 billion bushel carryover. It's really hard to get fundamentally bullish corn right now. What we could see is a short covering rally by the funds. This is a very strange time of year for the funds to be as short as they are. We have risk, as you've mentioned. Yes, we have had some weather concerns. Now, Thursday night into Friday morning, we had some pretty solid rains in much of Iowa. And there does look to be some more rains over the weekend. So it'll be interesting to see how we act on Monday. But I like Friday's corn close in December corn, up 2.5 cents. It was a big reversal off of the pressure that we saw early in the overnight session. So hopefully that bodes well going into next week to put some pressure on these funds that are short again, and maybe hopefully continue to see some short covering. However, I would say this. We're getting very close to the time frame where we'll be looking out into forecasts that get us into early July and get us into pollination, tasseling for most of the corn. So the time to get concerned about weather for corn, we're kind of fairly quickly getting to not the end of it, but the end of the most sensitive time frame of it. So if we're going to get a big weather story in corn, it's really going to have to happen really soon. I think soybeans are going to be the ones that really have the story. Soybeans might be the one that lead the grain complex higher.
Okay. All right. We'll get to soybeans in a moment. I need to finish you up on corn because ethanol had a little more production, 6th straight week. But the problem is we're all of a sudden not driving as much because we've seen a reemergence of the virus in several states. All of a sudden we're not traveling as much. That's going to probably put a little pressure on corn or not.
Yeah. Yes. I mean, there's certainly, and you saw it in the stock market this week as well, there's certainly concern of this, what they're calling a second wave of coronavirus. I don't really see it as a second wave personally. I think this is all just part of it. And on a side note, I think it is a very good thing that we're seeing a spike in some cases here, because this is the time of year where we want to get out and fight this thing. This is the time where we should be seeing that spike in cases. If we were seeing the spike in cases in November, we could have a major problem because hospitals are dealing with flu patients. And also, as individuals, it's much more difficult to fight this thing, or really any upper respiratory infection, in the winter months, late fall and winter months. So that being said, yeah, the market's concerned. I don't really think that is going to be a lasting effect. There is just this overwhelming urge for people to get out and start moving and doing things. And maybe we're not going to fly quite as much, although TSA numbers are up and have been rising steadily for the past 2 months. I think there's going to be a lot of families that want to take road trips, staycations where they drive 2 hours to a state park or something like that. I think we're going to have some fairly robust demand for gasoline and therefore the blend and also ethanol over the course of the summer months. In the next, I look for ethanol demand to be solid. And I think there's a good chance for ethanol exports coming up with China, with the talks that they had last week in Hawaii. Ethanol was on the list of things that they are intending to buy. They have made or reaffirmed the commitment they're going to continue to buy or really start getting more aggressive on the purchases. So I'm hoping for some pretty large exports there in ethanol, specifically to China.
All right. And you also see possible fulfillment of the phase 1 soybean allotment by the Chinese. This week, Lighthizer, Ambassador Lighthizer, was at Capitol Hill, and he said, hey, this is more than soybeans, but that's really the story we care about in rural America the most.
Sure.
A, do you think they're going to fulfill their contract? They being the Chinese. Go ahead.
Well, as far as fulfilling their commitments, and, Lighthizer said a couple of interesting things that make you kind of wonder, how much market knowledge he really has on things. But all that aside, I think the best way for me to answer this question without getting too political is let's look at the sales that we have on the books, not just to China, but just sales in particular that we have for new crop soybeans. At the moment, we're just under 4.2 million metric tons of sales for new crop soybeans. At this same time last year, we're at about 1.8. So we're more than double where we were at this time last year as far as our new crop sales are concerned.
Right.
This is a lot more similar to 2017, actually about 800,000 metric tons above where we were in 2017. By the way, in 2017, we ended with a 2.134 billion bushel export number. Currently, the USDA is looking for a 2.050. So I would say that just based on the sales we have on the books right now, we might be understated for next year's export sales for soybeans. And we're already dealing with a 395 million bushel carryover estimate from the USDA. That number could shrink. Now, some people would say acreage will be higher. We can talk about acreage here in a moment. But we really kind of need that. And we really need trendline yield for soybeans in order to have a halfway comfortable balance sheet. So if we do anything weather-wise to threaten that trendline yield for soybeans, and keep in mind, we'll be worried about weather for soybeans clear into August, there's pretty significant upside potential in my mind for soybeans.
Well, there's a concern, though. You say more new crop sales, best in 6 years. Those are sales, but they're not in the barn yet. That's what I think some people are concerned about. You can say I'm going to buy the new crop. I think a lot of people would sleep a little better if it was the old crop. All right, I have to get to the livestock. I know neither of you and I.
But wait, not best in 6 years, Paul. We had a much better year in 2018.
On new crop, I'm talking new crop sales, not just sales in general.
So
sorry.
New crop sales at this time in 2018 were 6.6. We're 4.2, so we're not as good as 18. Okay. We're better than 17. I'm using 17 as an analog year.
All right, because last year is a year that we don't. To compare it to last year is tough because sales were so far off, right?
We're more than twice as much sales at this point compared to last year. That's a really good sign.
Livestock, there was a cattle on feed report today. We'll get to the report on the feed on at first. The cattle, though, what's going on there? Because we continue to have the story of businesses, packers saying, you got to come back to work. And is there any of that playing into the market, or is this something just strictly numbers?
Sure, absolutely. You know, as far as packers are concerned, this has been the story. It's been talked a lot about on the news media. You know, they really latched onto that, how, you know, all the plants were closing and that our production was sharply off. And that was definitely true 3 or 4 weeks ago. But you look at some of the days this week, we're not quite getting to the same number of animals, but with the higher weights, our production's actually pretty close to numbers we saw at this time last year. So we are getting back to normal. We are filling that pipeline again as far as getting product to grocery store and things like that. And domestic demand has been really good. I think domestic demand is going to stay really, really good throughout this summer because it's one of our only options. I mean, let's gather in the backyard with our family, 10 people, you know, no more than 10 people, Paul. But let's have a gathering in the backyard with some burgers and some steaks and some pork chops. This is going to be a center of activity, I think, throughout the summer. So I'm really bullish on domestic demand. That being said, you know, we got to chew through some more animals. We're doing it. We're getting back to production levels, I think, quicker than what most people expected. So there will be a time here. This cattle on feed report was a hairy one, but again, that's retroactive. Going forward, I like domestic demand. I think we'll get through this supply of animals fairly quickly, and I see upside potential further on down the road.
All right, cattle on feed. You did say ugly. It was ugly, right? In a quick 30 seconds.
Yeah, I mean, on feed was basically 100% year over year. That was much bigger than what we were expecting. Marketings were 72%. That was lower than expected. Placements were 99%. That was better than expected. So it's not only bearish feeders, it's bearish fat cattle as well. But again, this is a retroactive number. I'm very curious to see what the trade will react to this on Monday because we're already down 2 days going into it. Maybe we shake off the bad news and try to go higher. But yeah, this was not a pretty picture, but it's one that we should have known about.
Final 30 seconds on hogs. Not much better of a story.
No, not really. Again, a lot of animals. We are getting back up to speed as far as processing is concerned. But listen, I'm looking at that December hog contract trading around 52. I'm wondering if we're going to have a little bit of a lack of animals by the time we get to late winter or late fall into early winter. I'm wondering if that December hog contract needs to be trading somewhere around 72 rather than 52. While we might not make that move in the very near term, I think that's an interesting thing to watch here over the next couple of months.
All right, Ted Seifried, thank you so very much. You can hear my timer said you're done. Hear that? See, I set a timer to see what's going on. Thank you, Ted.
Perfect timing, Paul. Thank you very much.
And that will do it for this installment of the Market to Market television show. But Ted and I will continue this conversation. We'll answer more of your questions in the Market Plus segment, which you can find on our website at markettomarket.org. Join us next week when we look at adding carbon to the list of commodity crops. Thanks for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Sukkot Manufacturing Company, providing equipment and buildings to store and condition grain to help farmers adjust to market swings. We build drying, moving, and storage equipment designed to preserve the quality of their crops. Sukkot Manufacturing. Store now, profit later.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.